Welcome back everybody, your typical bull here, and today we're going to finish up our course on tape reading. We're going to be talking about held bids and offers, what they are, how you can trade them, and how you can find some really high probability setups with great risk to rewards based around them. Before we get into it though, please do remember to like, subscribe, and comment. Your support really helps the channel to grow. And if this channel has helped you to become a better trader in any way, please consider clicking that join button on YouTube. It costs $4.99 a month. You get access to my watch lists. You get access to my direct inbox. Your comments will be featured at the top of all of my videos, and you get some pretty cool emojis. Or you can follow the page on Patreon with pretty much the same perks. So with that being said, let's get right into it. So held bids and offers are one of the more important aspects of tape reading. If you can spot them, you can find some fantastic trades with some great risk to reward ratios. You can find entries with as little as a few cents of risk, and this will provide you with many opportunities that the charts cannot show you. This is great for entries on something you're already watching, or finding a held bid or offer at the open can get you into some really good trades. Always pay attention to areas that trade with a lot of volume. They are important. You should be trading around these important levels. When you find an area with a much larger than normal volume traded on the bid side than is shown on the level 2, or a more than expected volume, this is relative, and those bids hold, this is what is known as a held bid. A held offer is exactly the same, only the other side. This is a great way to trade right out of the gates as soon as the bell rings. And you should always take notes of held bids or offers, no matter the side you're trading currently. If you're short, you could consider covering some or all of your position, and vice versa. For long positions, you should sell some or all of your position. So when there is a much more than expected volume traded on the bid side and it's holding, this is a held bid. When there's a much more traded on the ask side, this is a held offer. When held bids drop, this means the sellers are winning. There's much more supply than there is demand, and vice versa for held offers. If the bid is holding, the buyers are getting more aggressive. They are winning. Demand is larger than the supply. Held bids and offers will often refresh to hide the size of the accumulation or distribution. So what do you do when you spot one of these? When bids are holding, get long. When offers are holding, get short. It's really as simple as that. If the bid drops, you should not be long, and consider shorting. This is weakness in the stock. If the offer drops, you should not be short. Consider going long. These held bids are offers and causing strong support or resistance. You exit your positions when the bid or offer drops. You don't have to take the other side just because a bid or offer drops though. So do keep in mind, always use confluence in your charts and indicators. The more things in your favor, the higher probability trades you're going to be taking. So how do you spot them? It's really as simple as watching the tape. You have to be watching the tape. If I'm watching a stock that's trending up and trading at $9.09, and then there's a quick move up and it starts to pull back, and then I notice a lot of bids are being hit at 9.05, and all of a sudden I see a much larger than normal amount of prints on the bid at 9.05 that don't go below this number, this is a held bid. Someone is supporting this stock at this price. They're hiding their size at this level, and they're buying a lot of stock. They're accumulating shares. And then you start to see some underlying bids at 9.03. This is a great time to step in front of this guy at 9.05. You buy at 9.06 with a stop loss at 9.03 at the underlying bid. And the exact opposite is true for held offers. This is pretty cool and pretty simple. So let's kind of actually just go look at something. I'm going to scroll back a bit here and kind of show you what's going on. So right here, we're seeing a bunch of normal prints, 100 shares, 24 shares, right around 1600. And I'm just going to go ahead and draw that box, which would be right in this area here. We had a nice decent little run up here on the 5-minute from 91 to 92.29. We see these prints, the bids are stepping up a little bit, and we start to see some prints come in at 92, and then we start to see some more prints come in at 92, and then they keep stepping up a little bit, keep stepping up, and then it starts to pull back a bit, and we start to see some prints here at 92.06, 92.07, and then we start seeing more prints here at 92. And here's a big print. This is relative. It's 898, a big print. 1,700. That's a big print here at 92. Let's jump in there at 92. So we would jump in right here about 92. 92.01, 92.02-ish, put in our bid. And our stop loss here would probably be about 91.95. 91.90 even, 10-cent stop, not a big freaking deal. So big print, more big prints, 92, 92, big prints, 1,000, 3,000, 3,000, big prints, big prints, big prints, 92, big prints, 5,000 here. Look what happens, we bounce up to 93.67 right here in the pre-market at, or I'm sorry, the aftermarket here. Still see some big prints. This guy's supporting this price at 92, and the next thing you know, boom, 93.67, and then this guy still got some people buying at 92. And if I were a betting man, I would say that when the pre-market opens Monday, this thing's going to be at about 93.50, 93.60. Look at this volume here. It's huge volume. You've got momentum on your RSI. You've got momentum on your MACD here, your RSI, both are bullish, they're trending up. It's good. The setup here is good. Uptrend, pullback, good setup here right at the end of the close. This is kind of what I'm talking about. That's a held bid. Now, another example here. I can't scroll back far enough on these prints to find this area, but there is a held bid here. You've got a spike right here into open at about 89.80. You start to retest this VWAP, and a larger than normal amount of prints start coming in here. You could jump in here, retesting a VWAP. You've got this bullish momentum on your MACD, bullish momentum on your RSI. Look at this risk to reward. You jump in right in front of this guy, which also happens to be a very bullish candle. It's a pin bar, and boom, you make frickin' bukus of money on this trade in 5, 10, 15, 20, 25 minutes. That's pretty friggin' insane. And your risk was friggin' 50 cents. That's not bad at all. So this is kind of what I'm talking about held bids. Now this is just for the day trading side. On a swing trading side of things, right, you can find these important levels. Like right here, this is an important level. Look, it used to be a resistance, it's a resistance, it's a support, it's a support. You should be watching these prints here when you get to this level. $83 is probably about the level I'd be watching. So you get down here to 83, you're watching these prints. You're looking to see how buyers are reacting to this level. If you get to this level and a lot of bids start coming in on the day, and there's a lot of underlying bids, the bid side's pretty stacked over here, it's probably a pretty good indication that you should get long here. You could get long right here at about 83.30 with a stop loss just below that support level at around 80.93, and 2 days later you'd be out at 92. That's insane. You don't get that with these charts. You would have to wait, if you were just looking at these charts, to get into this pattern right here off of this support until after it confirms, which happens right here at $92. So at $92 you get confirmation, and your stop loss is a freaking mile wide, and your take profit is now here, about 2.5 times away, which is pretty ridiculous. If you're using tape reading, you can get in right here because you see the stacked bids. You've got momentum kind of reversing on your thing. Your freaking RSI is bullish. Everything says go. You've got a nice little inside bar candle. You're bouncing from that level. You can jump in right there. That's what we're talking about from tape reading. That's the kind of stuff you get from tape reading that you can't just get from charts. So watch the tape. If you're a swing trader, watch the tape at these important levels. If you're a day trader, record your trading days and then watch the tape back after the markets are closed. Find these key levels, find out how the tape prints and the level 2 is reacting to certain important price levels, and get better at this skill. It will help you. And with that being said, I'm going to finish up our course on tape reading, and I do hope that it's helped you guys to learn some things, and I appreciate it if you would thumbs up this video and share it to your friends. Consider subscribing to the channel, joining the YouTube or the Patreon page, and we will see everybody in the next one. Cheers.